What's going on, good people? Excited to be here, man. Me and TR Swain is in the building tonight. So tonight we're talking about the psychology of investing and overcoming emotional biases. So, man, we got some action-packed stuff for you guys. Man, I'm super excited. Full throttle. Good to have TR Swain back in the building from Swain Solutions. So y'all say what's good to her. We're gonna go ahead and get this thing kick-started right after we do our intro. So excited to get this party on the road. Let's go.
That's 100.
Yo. Let's get it. So man, like this video, share this thing up. We're back live here on the Come Up series. Y'all know what it is. So tonight it's going down. So the psychology of investing and overcoming emotional biases. There was a lot of topics that I came up with for the next few episodes, and I was just like, I felt like I don't think that we've done an episode that's really been based upon this, right? So I was like, nah, this is definitely a good episode to do. And I was like, TR, cook up some questions for me. And I think that's how we'll rock out today's show. So TR, I know you put in a lot of work on the back end, just getting those questions prepped. So
yeah.
Let's pretty much just hop into things. The psychological aspect, I think is like just super important, like more so than anything, right? Because, your mindset and your conditioning, your mental conditioning plays an important and huge major role when it comes to just anything, I feel like, in life, right? So when you're thinking about this and you think about like trading, when you're thinking about investing, I just realized, like, for the most part, one of the things that I think a lot of times that happens is that we sometimes discount that. Right. I remember last year I held an event and I actually brought someone from that psychological field. I actually brought them in, to actually speak at an event I did, because I just, I realized just how much and like really just how important it was. So, psychological thing is something I feel like that you can't underestimate. And, it's something that, it's like super important. And I just see the benefit of it in the long run, right? In anything that you do. So if your mind isn't right, then a lot of things won't be right. So, yeah.
Yeah, I mean, that's really true, Lawrence. And if you think about it, right, whenever you guys are investing, I'm sure that brings up an array of emotions in terms of like risk, anxiety, fear. So what we're doing, so what we're saying with this topic is really on point. So, all right, so y'all, are y'all ready? Let's go ahead and kick off these questions. Y'all know I got a lot of questions.
Let's fire it up, baby.
Awesome. Sure. So, well, first, Lawrence, let's begin. Can you first explain, like what are emotional biases and how do they affect investment decision making?
Man, so let me start with an example, because I feel like an example really makes it make sense, right? So you can have an emotional bias. You can have just you can have a bias towards anything. Let me start off there, right? You could be biased towards anything. And a lot of times I feel like growing up, we create biases based upon what our parents teach us, right? So there's a lot of times we have certain biases that form naturally throughout time. One of the things I realized is, for us as traders and investors, we a lot of times form biases based upon maybe a CEO we like, right? Maybe a specific product we like. So a lot of times I've realized, like, when we'll have these biases towards certain things, and sometimes we don't even realize it, right? Until maybe someone may point it out. And when it comes to biases in trading, it's something that could really be a hindrance, right? If you really like a company, right, and you really like a leader, right, maybe a CEO or someone else in their front office, that could lead you towards a bias when it comes to decision making. So from a trader's perspective, if you really like a company, you may be the person that has an edge towards just being super bullish on that company, right? I think that's one thing that I've seen, um, even from my standpoint, like a company that you really like, it's from a psychological standpoint, it could be difficult for you to short that company, even given a certain circumstance, right? If you really like a leader, if you really like, particularly that company, you may be really, really not inclined to actually short that company, right? So I think that's like one thing that I've seen, um, that I think a lot of times is like just super, super, super important for me to highlight. So overcoming that, let's talk about overcoming that. Um, it takes a lot. I feel like it really, 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 really takes a lot to overcome it. And the reason why I say that is like, for me, it's like, one of the most important things is, you start to love a company over and over again. And the success of maybe trading a company successfully over and over again, really puts you in a position now where, uh, you've kind of fell in love with that company, right? And falling in love with a stock, in my opinion, is one of the most deadly sins. I could speak to it. Like you could fall in love with. I remember when Beyond Meat first came out, and I kind of fell in love with trading that particular stock. Um, and I remember it cost me. Right, so there's a lesson learned. Um, Now I think I originally got into Beyond Meat around $40. It went to like maybe 220, 230. I ended up getting out at 160. Now, the reason why I got out at 160 was because I was greedy and I didn't take profits. And I had a bias to it as well, right? Because I really liked the leadership at the time in the company. And then I remember the CEO announcing that he had sold, like I want to say, if I remember correctly, like maybe 20% of its shares. The CEO actually sold that during announced that during an earnings call, right? And I remember the next day, like I remember the stock was up, like I want to say maybe about 10 points after hours. It was up about $10 after hours. But me having a bias towards how successful that company came out right out the gates, I remember when it pulled back $60. Um,
That's
and
a difference.
that was in one night, right? It pulled back $60. The next morning it opened up at like, it closed at like 220. Next morning, I think it opened up at like maybe 175 and then dropped all the way down to like 160. So, you know, ultimately I should have taken profit definitely before then. Still, it was still a great trade. Not even a great trade at the time. Wasn't really something, super, super long term I planned to be in. But I had a bias, right? And it was really just from the standpoint of me having a bias was because I believe that, I believe I had a liking to leadership, right? Right. And then certain times, and I would just remember in the past, even from a trading perspective, like sometimes you put too much confidence in one person. Um, like whether it was Elon Musk, I remember the battery day incident, right? Um, I remember Tesla was like, I want to say it closed at maybe like 425, 430, and the next morning it opened up at 360, right? And obviously wasn't a loss because I was a long term investor. Obviously, being a long term investor in Tesla, right? But just those pullbacks, right? You just remember things like that. You having that trust in leadership, and that trust in leadership, a lot of times can, put you in a position where, ultimately, you create a bias. So overcoming that is to understand that really at any time there could be a shakeup, and being cognizant of that. And that's one thing that I think over time you as a trader, as an investor, you're
Mhm.
able to kind of adapt to, because it's very easy to fall in. I won't even say in love with a stock, but it's very easy to go back to the well over and over again. So yeah, that would be my answer. Yep.
All right. Well, I appreciate that. And thank you so much. All right.
Mhm.
So now let's get on to the next question. So, fear and greed are emotions that often dominate the investment landscape. So, how do
Mhm.
these emotions influence decision making? And how can investors strike a balance between them both? Okay. So, that's what I'm asking on is between fear and greed.
Mhm. Yeah. So when it comes to fear and greed, let me say this right. Um, two of the main emotions, fear and greed drive the stock market. So let's start there. Right. Those are the two things that drive the stock market the most. Right. Fear and greed. Um, when there's fear in the streets, it's been said time and time before, right? When there's blood in the streets, even if the blood may be yours, it's been the best time historically to buy. Obviously, when there's a lot of greed, when things kind of seem, when they start to seem like almost too good to be true, that's usually where bad things happen. What I could speak to is, I remember late 2019, like TR, when I tell you, like every week, the stock market was going up. I remember Tesla. It's crazy. We're going right back here to Tesla. I remember Tesla went up for 12 straight Mondays. It went up 12 straight Mondays. And it went up 12 straight Mondays, and it went up like $20, $30. 12 straight Mondays. I kid you not. I counted it each time. And I remember, like, not even just Tesla, but the entire market. There was so much greed in the market. There was like really, 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 really so much greed. And I sat back and I realized, I said, man, like, this is really, 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 really crazy. I remember. And I was like, the market can go up from here. Like it was going up, like it was going up every week, every week, every week. And it was like there was no red in the market. And it just got to that point where it seemed like it was something, it just seemed like it was too good to be true, right? Certain stocks at all-time highs. You're seeing stocks like Tesla that just went from like 30-40 billion dollars in market cap to now basically about $200 billion in market cap in just a couple months. And you're looking at it, you're like, wow, it was crazy. And
Yeah, I can believe
obviously
that.
COVID came February 24th, um, 2020,
2020. Yep.
2020. And I remember that day, that Monday, was one of the worst days in stock market history. I remember not being able to get into my brokerage account at 9:30 a.m. The stock market was, dropped at that point. I think at open it was down maybe 1,100 points. I remember Amazon at the time, I think was down $86 at open.
Mm-mm-mm.
I think AMD was down like $10 at open. Um, I think Tesla was down about $80 at open too. I think, I'm just recollecting. Obviously, it's been a while, but I just remember seeing, things obliterated and be down 5 to 10%. I, I remember that, and it was something that I thought it was, super, super. It was a great learning lesson. Let me say that. You know, um, I also at the same time was paying attention. I had always been paying attention to the VIX, super heavy, even in 2017, but really in 2018, I really learned about the fear index, right? The VIX being a true measurement of that, measuring fear and showing when the market was greedy. And I realized, I'm like, okay, well, the VIX was just kept making lows and lows and lows and lows, just kept going lower. And so one of the things that I did was I bought, at the time, a ETF that actually tracked the VIX, which is called TVIX. So at the time, TVIX was about maybe $10-15. I was hedging my overall longer term portfolio and some of the bullish trades that I was taking. Um, and I remember TVIX. What I did was kind of look in the past and see how the VIX reacted in times of uncertainty and in
Mhm.
times of fear. And what I saw was how the VIX would always, in times of fear, it would break above 20, or it would actually, rise and go above 20 and go above 30. And usually when the VIX broke 40, that's usually where all panic kind of sets in. Um, and what I saw from TVIX, which was an ETF,
Mm-hmm.
kind of that really had a direct correlation with the VIX. I saw in 2018 that TVIX, when the market pulled back 20%, when Donald Trump was going through the trade war, there was some fear in the markets. The market pulled back 20%. I saw TVIX go from maybe about $20 to about 70. So I said, wow, when the market pulls back, I mean, this is something that I want to be able to capitalize in. And so what I did was, as those certain stocks were going up, right? Um, you know, I was buying a few TVIX shares because I was profiting from obviously Tesla going up 12 straight Mondays. The market was making all-time highs like every single week. So what I was doing was I was taking a little bit of capital and I was putting it into the TVIX for a rainy day. Nothing crazy, a couple $100 here, a couple $100 here. And obviously it added up over time because it was meant to be a hedge. Now, because of that, I remember opening up my brokerage account once again. Mind you, this is February 24th. Um, the market was obviously significantly down. So the trades that I was in, the investments that I was in, they had declined super bad. I mean, these things were burnt and toasted, right?
Right. I can imagine.
They were toasted and open. Once I finally was able to get into my brokerage account, once again, I couldn't get in at 9:30, mind you. So I'm seeing all of this action pre-market. I'm not able to get in for at least like maybe 2 hours, right? If I remember, maybe about 11:15, 11:20 was finally. So mind you, it wasn't that the market was closed. I remember we did what is called a limit down, right? For those that don't know what a limit down, that's when the market drops more than 5% in a day and they pause trading for 15 minutes, right? So a limit down had occurred. So I think it occurred somewhere, I think it was like 9:40, around 9:40. So the market was paused till about basically almost 10 a.m. But for the rest of that time, I wasn't able to get into the brokerage account. Um, you know, I had a Charles Schwab account, couldn't get in. TD Ameritrade couldn't get in at the time. Couldn't get into anything.
This sounds stressful. I'm sorry. This sounds like you're stressing me out when you were living this, actually.
Couldn't get it into anything. But the silver lining here was because I had bought the TVIX, when I opened the brokerage account, I was down 5 figures. If I'm remembering correctly, I had to have been down from a trades options perspective. I think I was down maybe $12,000 or $13,000. From a portfolio perspective at that time, it had to have been somewhere near maybe 25,000, right? If I'm just remembering glancing that day. So you're starting off that day, I'm down somewhere around 35,000, right? Already, mind you, couldn't touch anything, couldn't touch any options that I had. So I was down about 35,000 that day, just starting off, right? Not the TQQQ. We'll talk about the TQQQ later on in the show, but the TVIX, which is no more, actually saved my portfolio, right? Because I was actually putting money into that fear index. So the TVIX, it saved me. And that was the part that the lesson in this, when you talk about fear and greed, is because I had both. I had a mixture of both. I was fearful and greedy. Because part of me was kind of, getting accustomed to the market making these all-time highs, and you can kind of fall in that trance of, man, it's just going to keep going. But part of me was also fearful because I said, this is too good to be true. So I bought the TVIX and I was able to hedge myself on the downside. So when those losses, which were all unrealized losses, The only ones that ended up being realized were the options, obviously, but the portfolio at the time, they were all unrealized, and it was a rough day. Um, and there was other parts where I didn't even open certain things up because I just already knew it was bad. Um, but that was part of the process. Either you could, kind of complain about it, or
Yeah.
could figure this thing out. And that was kind of for me when you asked about the question of fear and greed. I didn't look at the 2020 when the market started to come down. I didn't look at it from a fear perspective. I really looked at it as an opportunity because of what I saw in 2018, right? So through that experience of me seeing a market pull back 20%, even though this time around it was definitely more severe. You're talking about a virus that's killing people, all
Right.
types of stuff, so way more severe. But I really didn't look at it as nothing but really just an opportunity, right, for me to um, once again figure things out. So that mindset of not being um, just greedy, but also being a little bit fearful. Because, like I said, every time the market was making new all-time highs, it was something in the back of my head was telling me, "Man, this is really too good to be true."
Right.
Um, and so I was doing those little things, those little hedges, on names like on names like Tesla, right? Shopify. Um,
Mhm.
I was really heavily invested in Shopify at the time. So Shopify pulled back from like $400 to like 280, about 280. So that was rough. Tesla obviously pulled back, so that was clapped.
Right.
Um, at the time, I was also investing in Square, so that pulled back. That was clapped during that time period. But the volatility, I would say, is what during that time period you talk about fear and greed.
Yeah.
The volatility was insane. When I tell you, TR, like if you were a trader, you couldn't even use the bathroom while the stock market was open.
Oh my
I
God.
say that with no pun intended. Like literally weren't able to use the bathroom because that's how much volatility was happening. Like I remember the Dow would be -1,000, and then it could end the day up 500, which that's like a 1,500 point move turnaround in a day. What you think about it is like, you know, even think about it is now, like when was the last time the Dow went up 1,000 points? Even now, um, I think it's had to have been at least 2 years since or at least 18 months since the Dow went up 2,000 points. So it's been a while since the Dow last went up, 1,000 points. I want to say at least maybe been about 18 months. I think since the last time it may have fell, I think the Dow has dropped 1,000 points since the last time it's went up 1,000 points. So just think about that. It's not something you see on the regular. The Dow right now, it's really a good day for the Dow to be up 400, 300, 400 points. That's really a good day right now. So that type of thing, and when you talk about how can it affect your trades, it definitely can from a confidence standpoint. Like it was the wild, wild west trading in that environment. Um, and so you're talking about these up and down movements, just
Yeah.
wild and crazy. So yeah.
All right. So, quick question before I continue this conversation. And I hope you guys are enjoying this because I'm learning so much. I know everyone is learning so much with you being transparent. So, we really appreciate you for real. Okay.
Yeah,
So,
definitely.
you mentioned so like the TVIX, so it's not active anymore. So, do investors have
Yeah.
an alternative?
So you still have active. So they delisted the TVIX. Um, it's actually the ETF that I believe it is now is TVIXF.
Okay.
It is delisted. It looks like as well too. So they changed it. So you still do have one version of the VIX that you can track, which is the UVXY, which is the UVXY. So that was another part of what I looked at was the UVXY. So if you notice, and I'll show you. And the thing about the UVXY is what we call it is a ETF that is a bear ETF. So any bear ETF, think about this, right? So I'll say it simple. The stock market is designed to do what? It's designed to go up. So anything like a bear ETF is really technically designed to go down over time. But there is going to be periods, obviously, if the market pulls back,
Right.
that those ETFs are going to go up, right? So the UVXY, it's about $16.64 right now. If you look on if you pull up a chart, particularly, and actually I'm gonna see if I can get the UVXY. And so they kind of like delisted a lot of these, or make it hard to actually trade a lot of these like it was in the past, right? So it was way more easier to really trade the VIX in the past, even when Donald Trump was in office. The UVXY you could buy options on
Gotcha.
pretty frequent. You could still do it, don't get it twisted, but it's not the same. It's definitely changed. So I'm gonna go full screen. And let me see if I can share my screen real quick.
Yeah, because I was going to ask you to do it anyway, so they can see it too. So
Yeah,
yes,
so I'm talking about. Man,
like
definitely make sure you guys are liking this video and sharing it. We got 160 people tapped on. Super excited. So get into that nitty gritty, man, here tonight. So, all right. Everybody can see the screen, right? Everybody should see. All right, so it's gonna show you that the UVXY was it's gonna show you that it was like $1,000. To explain it very simple, very quick, the UVXY has did about um, I don't know, I want to say at least 2 to 3 splits. Um, Potentially maybe more. I haven't been tracking it a bunch, but it may have done more. So it's done reverse splits, the UVXY. So that's why the price is showing you this. Uh,
mhm.
so the UVXY was not $1,000, just to be clear. It was never 1,000 at that time. The UVXY was about it was about $10. So the UVXY went from like $10 to $100, which is where and it briefly broke over $100 here and went to, I think it was about like maybe 140, 150. So you had the VIX that was running up significantly. Let me see if I can pull up the TVIXF and see at least if they can show this chart. Yes, they can. So the TVIX, this is exactly what I was talking about, right? Mind you, this is right here when COVID hit. And go here to the 1 year. Just to kind of zoom in, just to kind of give you guys a closer look to actually what happened. So mind you, what was I telling you? This whole time, the market was going up. This was, if you look here in 2019,
Yeah.
this whole time, TVIX was dropping because the market was going up. So the VIX was dropping. And then even here in 2020, it was flat. And then what happened? The beast like awoken here in February, right here, like I told you.
Yep, it's spiking.
Like looking on 24th, right? Look at that. Look at this jump.
Damn.
24th, February 24th. I'll never forget it. All right, February 24th here. And then look at what's happened thereafter. TVIX. So now something that I bought at, like 30, $20 ended up going here. And if you take a look at the date, actually right here, you'll see this jump right here on 313 towards 316. So if you go back to your calendar, I want everyone to go back to their calendar in 2020 and tell me exactly what day that is, right? So go back to your calendar in 2020. And I want you to look at actually here at March 13th, right? That was a Friday. What do you think happened on Friday? I want you to type in Donald Trump, March 13th, 2020. That's what I want you to Google real quick. Donald Trump, March 13th, 2020. That was a Friday. What actually happened here?
All right, perfect. So KP just shared that he declared a national emergency.
Yeah. Bingo. Proclamation of declaring a national emergency. This is his press conference. He did all of this, and guess what? Exactly what happened here. We saw. So the TVIX took off, right, even higher. So think about it. It gapped up while he was talking. It gapped up like another $170. Like it gapped up another 170 right here.
That's insane.
Basically, really, actually over. So if you think about that, then it gapped up right here into Monday. And so the TVIX then hit almost $1,000 a share, and then pulled back. If you think about it, right here on the 23rd of March, that was pretty much the market bottom, right? And then ever since then, obviously, this pull back, pull back, pull back, pull back. So once again, if I go here to the past here, it's late 2018, I seen what happened. CVIX took off and went up, about 300%, right? So, I've seen it, what I learned in the past about, how the greed, the fear and greed in the market really works was, in my opinion, like just super, super, super helpful. So, yep.
Now, well, listen, I appreciate that. So you all have just heard so many gems from Lawrence with him discussing like just really like the importance of how to position and get out of having fear and greed. But next, I want to get your opinion on overconfidence because that's another behavioral bias that can lead to misguided investments. So please talk to us about that, overcoming overconfidence.
Yeah, I think one of the things when it comes to being an overconfident person trading wise, I think what happens is that you kind of like you really create a bias, right? And there might be maybe there's a specific stock or something that's happening, right? And you're super confident that something's going to go in this specific direction. And then you try to take you try to have a move that takes place from that. That's not always really, in my opinion, that's not really always the best thing to do, right? You don't want to be super uber. A lot of times you don't want to be overzealous, right? When getting into a position, you want to be mindful of that.
Okay.
Like you don't want to be overzealous. You don't want to bank too much on something happening in the market and guaranteeing it. I think that's a recipe sometimes that all of us may fall victim to, right? We get accustomed to something and we think that it's always going to happen or always going to play out this specific way. And we kind of got accustomed to it, and it goes the opposite way. So that would be what I would personally say. Overconfidence also can lead to you putting up a more than what you should, maybe on a given position. I know I've been there before, right? And like I said, we taking the gloves off here tonight. I feel like what you're hearing right now, everyone, in my opinion, should be having the notes out and be willing to listen. And I'm just speaking the truth, the reality. I don't know where you're gonna get a lot of this transparency really from, because everyone tells you, we're talking about real losses. We're talking about, real times of, obviously, market decline, what it looks like, right? And real mistakes that were made. I remember being the person that I remember me particularly, right? Like sometimes having an overconfidence on a particular position, and like, you putting up way too much than what you should have put on it. Because you're overconfident that, this is gonna happen. This is gonna happen, and you fall victim to it. It's something easy, in my opinion, I think, to fall victim to it. Just speaking from experience, you may really have, that goes back to that bias part, that emotional bias, right? You have an emotional bias to a company, and you kind of over leverage. So That's something super, super, super important.
No, that's real. That's real. So, do you know any ways that people can basically mitigate this overconfidence?
Yes, I would say one of the things that I've kind of like realized from a mitigation of that overconfidence is really, even if you know a ticker, don't just think it's already written, right? Like being open to hearing different people's opinions. Whether maybe it's an analyst, right? Particularly on a stock. Even let's say you're a bull on a stock, but an analyst is bearish. Don't just close off that bearish take just because you're bullish, right? I would say that would be one piece of advice, because I found it that a lot of times when you're able to listen to the opposite side of the spectrum of what you may think, that can kind of be really a help to you. So that would be something that I would say. Yeah.
Okay, all right. So I remember I had a conversation a couple of days ago with my cousin because he does trade heavily, and he said that he had to overcome his fear of missing out. So is that also something that like many investors experience too?
Yeah, everyone I think deals with FOMO. I think no matter sometimes maybe what level you kind of have a level of FOMO.
Mhm.
It's just about mitigating it. Recently, I think I would say what's probably been one of the biggest FOMOs where people's like, yo, it's probably NVIDIA, right? The
Okay.
move that NVIDIA has made from an AI company perspective this year, NVIDIA has really blown things out the water. We'll say that. So I think from perspective I'm stating is some people feel as if, hey, I missed out on, this company making its run. How am I gonna actually be able to where's the when is it where's the next move, right? What's next? Like I think that's something easy a lot of times that people could fall victim to. So yeah. Yeah.
Okay. Yeah, yeah, that makes total sense.
Yeah.
All right. So I guess like on a positive note, right? Because I know you always mention importance of patient pays, and I know that that also definitely will, I guess, like affect in terms of you like
hmm
eradicating all of these biases too. So yeah.
hmm
So yeah. So can you elaborate more about that? But like patients too.
Yeah, it's one of the things I would say is like sometimes I'll say this, like sometimes you just honestly really don't know. Um,
Mm-hmm.
you really, really, really a lot of times you really don't know when a company could really be on the verge of a huge breakout, right? So I think from that perspective, it's like patience pays. I think for me, that standpoint is like it's crazy because some of the companies that you just weren't patient enough, you come back maybe 5 years and you're like, wow, you just look down, you like shake your head, you like, man. Like I would say one recently that's really been kicking me because I remember when this ticker was like $200, right?
Mm-hmm.
It's AVGO, Broadcom. Um, it's just crazy because I guess I was super apprehensive on purchasing the ticker. I don't know why, really, to be honest. I think because sometimes you kind of want to see the story play out right away. Um, and it's crazy to see, Broadcom. I believe it, I think it hit. I try not to even look at it a lot because it's just like every time you see the ticker, you're like, man, it was right there. Um, I think what happens is a lot of times you're looking particularly at a ticker and you're like, man, I'm expecting that, it's going to play out super, super fast. But even the names I feel like we rave about, like for the most part, majority of those tickers were like they were trading sideways for a lot of their existence, like Nvidia
Mm-hmm.
for 16 years, Microsoft, well, even for the first 15 years of this century, it really didn't return much to investors. Over the last 7, 8 years, these tickers have, been world class. Um, so I think from a terms of like patience pays, like you could be investing in something for 5, 10 years plus, and um, it could really be a make or break type thing. So it's just about having not just the confidence, but I think the scaling in and scaling out, I think is something that I think is super important as well. So scaling into a position and not putting all your money in at one time, I think makes that part easier as well, for someone to be patient. So yeah.
All right, I appreciate that. Thank you. Thank you. Thank you. Thank you. So just from I guess like from a standpoint when you were younger, did you ever have like that term like anchoring bias? Did you ever experience that too when you were first starting out with the stock market, like in trading?
Mm-hmm. You say that one more time.
So like have you ever heard of the term? It's called anchoring bias. It's like basically where you're relying heavily on like initial information and you're just sticking to
Mhm.
that. Did you experience
Yeah.
that as well?
I don't think really for that. I don't think really I experienced that really at all. Because for me, I feel like I never really went with what was said. Right. I kind of went with not even what the consensus was either. Because one thing I would say that was super good, that I really appreciated was I remember like the first thing that was said about this company, like Tesla, right? Even the first thing that was said about Shopify, right? I kind of stayed away from listening to too much noise. Like I never was the person that really ever had CNBC cut on, right? Or was just listening to this or just hearing this for the first time and just running with it. Like for me, I was always that person that, okay, I gotta see. Let me see how this thing is. Let me see how it's gonna play out. So not running with the first thing that's kind of put in front of you. So I
Mhm.
never really dealt with that bias at all.
No, that's good. That's good. So I'm about to bring something to your attention from the chat. So shout out to Audrey B.
Mhm.
So she asked, "Do you think we should be scaling out of tech?"
No.
I
Um,
agree. Don't do not do not.
I personally don't think so. Like these tech companies are just firing on all cylinders. My personal opinion is, they'll continue to move up over time. So for me, no, I personally, no, I would not recommend that. From a longer term investor perspective, no. If you're someone who's may have had options trades over the past few months that have, printed X amount of percent, then maybe you're thinking about taking profit. But my opinion is, nah, I think all the tech is dead. Um, that narrative didn't last very long. So
Yeah,
um,
it's not. And then even from like a job market perspective, I have a lot of clients interviewing at these same companies that had these mass layoffs. At Amazon, she got an offer. A client waiting on the one from Microsoft. So no, there's definitely growing again for sure.
well, so yeah, nah, definitely not at all, for sure.
Okay, perfect. All right, so like another question I have for you is just the importance of being self-aware. So what
Mhm.
are strategies that you leverage to make sure that you're self-aware when you're investing?
Yeah. One thing I think I've been good about is um, one thing that one particular strategy I feel like being self-aware is like when you realize you're kind of hot, take a break. I think that's one thing that I've been probably better at over the years. Is like when you kind of hitting trade after trade after trade or whatever, being willing to walk away from it and taking a break, I think is super important. It's healthy from a health standpoint. So I do think that is something that I definitely would say as well. Like being able to like kind of like test yourself, right? Knowing also what you're good at and what you're not. I think is super important. Like knowing where your weaknesses are. Um, I think that makes you better all overall person and an overall trader. Being able to say, hey, this is an area I'm weak in, so I need to become better and working on that. So I think that's something as well too, in my opinion.
All right, no, that's really awesome. So the last question I have is just the importance of like making rational decisions. And so if you can just share, I would say like three pieces of advice with the audience, please do, in terms of making rational decisions.
Yeah, I would say number one, go with your gut. I don't think my gut's ever been wrong when it came to a trade or an investment. Um, that would be number one. Like if you go against your gut, that's usually where you lose. I remember being in trades that I knew my gut was telling me to take the other side, but yet I was, in the other on this side that I was on. So I know going with your gut is something I would definitely say. Trust your gut.
Mm-hmm.
give you good, really gives you a probably greatest edge. Um, I also would say number two is to pretty much just ask that part again, just so I could be clear.
Oh no, so I'm just talking about like the importance of
Three,
making like rational
yeah, you
decisions.
said three, yeah, yeah. So
Agree.
gut, what gut? Number two is um, number two is stick to your thesis. And that kind of it's not the same as going with your gut, but sticking to your thesis is really a thesis is not a gut feeling. A thesis is something that you've done qualitative and quantitative research on, and you came up to a decision, right? Like, don't let one thing waver your thoughts on something. Like, maybe don't let one bad price target decrease change your opinion on this company. Don't let one bad article change this. Um, I also think sometimes just like really just blocking out the noise. If you know what you believe in something, like you shouldn't be listening to what the rest of the world has to say about it. Like I think that's one thing. Like I remember just with Tesla, like people said Tesla will never turn profit. Tesla will never do this. Tesla will never do that. And then Tesla did everything then some, right? So if you was listening to what the rest of the world was telling you, like what could you really at the end of the day, what could you really come out of that and really have done? So that's really my take on that.
Okay, so basically, you mentioned the importance of education, also diversifying your portfolio and getting rid of biases. So, yes, thank you so much, Lauren. So, yeah, you answered all the questions I had. I appreciate you.
For sure, for sure, for sure. So, as we pretty much, wrap up here, the psychology of investing. I say that like, we start off the episode with me talking about just the importance of it. But I think it's something that it takes time to like really just build. Like the psychological aspect to me is just it you have to just really build it up over time. Like your mindset, it's in tune with your body and your psychological. Like if one of the things that I know is like just to even tell you guys a story. Like when you're not really right in the mind, I think sometimes the best thing to do is really to stay away from the market. Um, I remember like when I kind of was dealing with some, family losses in life, just sometimes you could feel like different pressures on you. So I would just tell people like, it's okay to sometimes take a step back. Um, you don't have to try to do everything in one day. Rome wasn't built in one day. And I think we just take it one step at a time, one trade at a time. You
Mhm.
pretty much make it a lot easier on you. So um, that's personally what I would say. I think going into the end of the year, um, my mindset is just every single day, what can I do to really just get 1% better? That's really my mindset. Like, what can I do to put myself in the best position possible? Um, that's just really what it is. One, one, one step at a time, one day at a time, one workout at a time, one trade at a time. Like that's really the mindset that you really have to have. Um, and the more you hone in, the more you kind of put yourself, like I said, in a better position, really just long term. So that's really what I can just attest to and what I can allude to, here as we head into, like I said, the last part of the year. So before you know it, it'll be Q4, and that's pretty much what it is for sure.
All right. Well, we appreciate you so much, Lawrence, for being transparent. And as he mentioned before, you're not going to get that everywhere. I promise you. Okay. You're not. You have a lot of people that like to sell you, what is it, these like courses and whatnot, and they don't really care about your well-being. I can honestly speak on Lawrence's character, and I know you all can too, about just the importance of just really caring, because you're not going to get that everywhere. So drop
Yeah,
my but
appreciate that for sure. Yeah, I mean, I feel like the reality is like anything that I experienced, I just took it and like
yeah.
you can come back tenfold from it. Like, um, I just like I said, I remember, when I remember, I remember like when certain things happened, and you can kind of maybe there's a little bit of discouragement, but you just know you got to just keep pushing and keep going, because every opportunity that you have is like, a powerful thing. So I just think, for me, it's just really just a mindset. Shooters shoot. So, even the best 3-point shooters, they go through sometimes a little bit of a cold streak. But like, how do you really come back? Best shooters, they forget about the last shots that they missed. They focus on the next shots. So overcoming that bias, I just think is something that's just a process, right? So it's really just a process. So, shooters shoot. So continue to show up and, get the reps in. And that's what it's about. So I just look forward to every day, because each day is opportunity, and you got to be really grateful, because, someone didn't wake up today. Um,
Right. Man.
Someone didn't have an opportunity. We still have a lot of people here in the world that don't have clean drinking water. We still have a lot of people here that don't have a roof over their head.
Right.
We have a lot of people, like I said. So it's just really, like I said, from a mindset perspective, like, um, yeah, that's really what it just comes down to. But for me, it's just like, you wake up, you go get it. I'm actually about to start this 33-day workout challenge. It's gonna kick off tomorrow. It was actually gonna kick off today, but honestly, I just didn't really have the energy. Not really, a little bit of a headache. But tomorrow, um, I'm kicking it off, this 33-day workout challenge. These are the things that, when you think about from a psychological perspective, what you can actually do in the gym is you can actually put yourself and you can put your body through intensity. If you can survive an intense workout, you can survive maybe a rough day, right? An intense day. So um, you want to live up to those expectations that you may have in the gym from a workout perspective that translates into business. So I just think it's just about keep striving, like keeping your foot on the pedal, keep going. Um, and you got to overcome not an emotional bias only, but sometimes the emotional societal pressures. It's super tough sometimes to keep maybe sometimes some of the emotions at bay. Um, you're only human at the end of the day, so you're not a robot. You're not a Terminator per se. You're not a T-92. Um, so you have to be able to have that adaptation, and you got to appreciate it. You know, I, when I see, driving, when I seeing, there's homeless people, and there's people without a place to stay, people without clean drinking water,
Yeah.
fresh deodorant, fresh shower, um, fresh shoes, socks, fresh underwear. You have to really say, you know what, like, I'm really blessed. And so um, I just want to thank everyone for tapping in here tonight. Shout out to the Come series. Feels good to be back live. Be expecting a lot of stuff in the pipeline, um, the next couple weeks. So, like I said, I'm excited, geared up. I'm ready to go. Um, and let's go out here and get this thing. So appreciative to y'all. Let's make these moves, y'all. And we're going to see y'all next week. We got a special topic for y'all. We got some stuff we're working on in the pipeline. Me and TR, we're still going to be hosting that. Obviously, summer's been super busy, y'all.
Yeah.
So we're looking to still do that live episode in Dallas here pretty soon.
Yeah.
And, my boy, he signed back with Dallas, and he got paid. So shout out to the good brother Kyrie Irving. Y'all know I love Kyrie, and his new home for the next 3 years will be continued in Dallas. So I'm excited. So I appreciate y'all. I'm gonna rest this voice up. I'm gonna rest up, and let's go. Let's go and get it. Yeah.
All right. Have a good night, cousins. Bye. Have a great week.
Peace.